in terms of like protection, can I share my screen again?
Yes, Ross, you may.
Thank you.
While we're now pretending that you don't know how to use Zoom again. But no, I can't see your screen right now.
Yeah, I'm going to share it now. But I
Okay.
mean, it's the funny thing. It's just like from a protection perspective, this is one of the more powerful ways I can think of to actually talk about it. Because as humans, we're very inconsistent with how we treat things like insurance.
Yep.
You know? So I mean, you think about the example, maybe you've seen this, but everyone's got a cell phone now. And that cell phone today, is probably worth $1,000, which is wild. Is this big enough or should I make it bigger?
I'd make it a little bigger.
All
And,
right.
and side note, since I am recording this, if I ever show it to anyone, Ross and I just completely transitioned from talking about offensive retirement planning to defensive protection planning when it comes to financial planning. Also, side note, I don't use the cell phone part of this anymore because I stopped buying cell phone insurance because I had such a bad experience with it.
Right, but that's the point, right? I mean, it's the worst.
Yeah.
It's
You get like an
actually,
old refurbished phone that doesn't even work. It just looks nice. I'm like, gee, thanks.
but it's the worst value for your
Yeah.
money. I mean, but here's the thing. Like, here's how this goes. When we to show the inconsistency with which people view insurance.
Yes.
Um, I mean, I should probably. Well, I'm just going to do it like this. So if you start, everyone's got a cell phone. Cell phones are worth $1,000 plus nowadays. And we buy insurance on these cell phones, except for you, Drew. But we buy the insurance and basically say that, look, hey, if I break my phone, I'm willing to pay $150 of that, and that's the deductible, right? And in exchange for that, the insurance company is going to be on the hook for $850 of replacing that phone, unless they have your experience or whatever that might be. But that's how we treat that. And then it comes to cars, and people might buy a $20,000 car. And what they say is, well, gosh, if that car gets totaled, I'm willing to pay, let's just call it $1,000 of that to replace that car. And we're going to put the insurance company on the hook for $19,000.
So to clarify, you're saying the thousands the deductible, right?
Deductible. Yeah. So that's what I'm willing to pay. So me, and this is the insurance company.
Yep.
I'm going to put them on the hook for the big part.
Yep.
And then it comes to our homes and things like that. If you've got a $200,000 home, we say, well, you know what? That's a pretty big deal. I'm willing to pay, if this thing burns down, I'm willing to pay, $2,500. That's your deductible. And I'm going to put the insurance company on the hook for $197,500. That's the insurance company, and that's what they're going to pay to replace this.
Yep.
So we treat insurance the same in a lot of aspects of our life until we get to one thing. Drew, what's your biggest asset? And I'm not asking this as a trick question. You know the answer. What's your
my
biggest asset?
asset's me and my ability to work for the next X amount of years.
You. That's right. You are your biggest asset. And here's the thing, and here's why. Because we tend to think of ourselves in terms of what we earn this year. Because we're told our salary is X number of dollars this year. But let's just say this person earns $50,000 a year, $50,000. Well, if they never get a raise and they earn $50,000 for the rest of their career and they work for 30 years, how much is their future income worth?
I think 1.5 million if I did the math in my head right.
That's right, $1.5 million.
Put me on the spot here, Russ.
so just in a very simplistic way to think about this, I mean, you as an asset, if you make $50,000 a year and you're going to work for 30 years, you're going to bring in a resource of $1,500,000. Oh, shoot. I might have run out of space here.
That's all right. I can still kind of see it.
$1,500,000. Well, you'll have to bear with it. That you'll bring in for your family. So you are an asset worth $1.5 million. That's if you never get a raise, right?
Yeah. Never get a raise. Never did anything but make my $50,000 and go home.
Yeah. But here's the wild thing about this is when it comes to our biggest, most valuable asset, we flip this whole thing. And we say, well, you know what? If I pass away, my family's going to be good with putting the insurance company on the hook for $250,000. So I'm going to have $250,000 of life insurance.
Can I pause you for a second?
Yeah.
I know you just made that number up, but in my experience, that number is almost always correlated to one of two things. Either one, how much money do they owe on the home, because that's what some P&C agent told them they should have,
Yeah.
or two, whatever their group life insurance is. I got 3 times my income through work, I'm fine.
Yeah. Oh, absolutely. And I mean, that's the thing. It's because we're not – everything else we look at what asset we're insuring, and we're picking the coverage amount based on that. But here, when people might choose 250, or let's say it was 200 because they have a $200,000 mortgage, you're basically saying you're going to replace you, which are, you know, you're $1.5 million asset. You're going to replace you for your family by paying off a $200,000 mortgage. So instead of receiving $1.5 million over the next 30 years, your family's going to really receive $1,200 a month. That was the mortgage payment. That's not a fair comparison. It's not even what it's meant for. Insurance is meant to replace the asset that it's protecting.
Yep.
So only when it comes to our biggest, most valuable asset, which is us, ourselves, do we say, well, we're going to put the insurance company on the hook for the small amount, and we'll take on $1,250,000. Actually, we won't. Our family is going to be fine taking on $1.25 million of income that they'll never receive.
Yep.
It's totally backwards. It's the
Yep.
most backwards way to think about this, but this is how most people have been trained to do it. And it's because people have been taught to undervalue themselves.
Yeah.
You are valuable.
Yep. And I think the perception becomes our reality. So in a world where we're taught to think what the Dow Jones does today is a big deal, we're also taught to look at what's our income this year as a big deal. I like to ask the question, Ross, is your entire financial future, is your daughter's entire future, is your wife's future all dependent on how much money you make this year? Or is it depend on how much money you make over your career?
It's dependent on the whole sum of cash flow.
Exactly. But for some reason, we're taught to believe that the amount of money we make today or this week or this year determines the rest of our lives. So that's all we need to protect.
Yep. And it's just not the case, is it?
No.
So I mean, I just think that this is a really good illustration. As terribly as I drew it out there, it's pretty sloppy. It's like we need to think consistently. In coming back to the house, I mean, you're not going to insure your $200,000 house for $50,000, are you?
No.
Of course not. You want back what you lost.
And the funny thing is, Ross, some people would try to insure the $200,000 house for $300,000 because they'd want extra when rebuilding.
Yeah, exactly.
So they go over the top for a home because we can mentally imagine losing our home.
Yeah.
No one likes mentally imagining losing their lives.
Yeah.
And as morbid as that sounds, it's just the reality of it. And I also want to put a disclaimer on this. Ross and I aren't saying to anyone that watches this, if we ever release it, Ross and I aren't saying that everyone needs 1.5. That's a personal decision. I just believe personally that it's you deserve the information to make the best logical decision for yourself. And unfortunately, not enough people are getting the explanation of what they're actually worth. So
and
they aren't making
available to you.
Exactly. Yeah. Right. So my goal, anytime I bring this up in a conversation, is not to say this is what you should have. My goal is to say, did you realize you're worth this much, and how much of yourself would you like to protect?
Absolutely. And I mean, this goes for life insurance and disability. I mean, you know, disability insurance, it's the same loss if you can never work again because you're sick or hurt.
Now you're just alive and you have to pay for it.
Yeah, you're just alive to be there, be the recipient of the claim. So, I just be consistent, you know. And part of planning, everyone should realize that planning is a process, right? It's not an event. It's not buying a product and being good. It's a process. It's about planning, and part of planning is thinking consistently and taking consistent actions throughout your life. So when you think about things like this, just do it consistently. And the truth is most people probably are sitting here going, well, that's going to be super expensive. Frankly, this is probably going to cost you less than all of these three.
Yeah, let's not even get into that.
I know, but it's just funny. You know, it's a perception. So just know that the amount's what matters. Professionals can figure out the cost part. I mean,
Yeah, and there's many options available. No, yeah, thank you for drawing that out. I know I've seen it many times, but the conversation around it's always valuable because, like you said, I think in the beginning, it's all about education. Our goal is
Yeah.
not to make decisions. Our goal is to provide good enough information so people can confidently make decisions for themselves.
Absolutely.
At least that's my goal. Maybe I shouldn't speak for you, Ross.
I kind of missed the first part of it.
I probably
I was
spoke
looking,
really fast.
I was looking at my drawing. But you're right. You're right. That's the goal. I mean,
Yes.
to just empower people to be able to make good decisions for themselves.
Yes, and I love sports. I know not everyone does, but I'm not aware of any sport in the world where you can have a great offense and no defense and be successful, or a great defense and no offense and be successful. So
What
I always
about
put
golf?
planning.
What about golf? I mean, that's an individual sport. There's not much defense in golf.
I would argue the defense in golf is your ability to adjust to different situations. No golfer in the history of golf hits from the fairway every shot.
Hitting escape shots and whatnot. Sure.
Yes,
Yeah,
recovering.
that's fair. That's
I'm
fair.
pretty sure the long drive contest winner is never the PGA winner.
That's
I
usually.
shouldn't say never, but I'm pretty
Dustin
sure.
Johnson hits the ball pretty far.
Yeah, but those long drive contests, they have some weird name people that all they do
Oh,
is ball par.
yeah, absolutely. It's insane. Have you watched those guys like watch the ball when they hit it?
No,
It's incredible. Oh my gosh. Sorry.
that's
I
okay.
really want to play. I'm missing golf so bad right now, man. I want to play golf.
I'm in the same boat, and I'm laughing because I'm just imagining like us showing other people how you and I conversate on a regular basis,
That's okay.
just from one extreme to the other.
We can let people in.